and welcome to Chart of the Day Cafe for Tuesday, November 14th, 2017. Disclaimer quickly. Trading stocks is a high level of risk, and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Not making any recommendations, always for your further homework. Good morning, Sue here with video number 297 in our regular Tuesday, Thursday morning video series. As a reminder, I put these videos out twice a week, every Tuesday and Thursday morning. I aim to make them under 10 minutes and get them out before the market open. My goal is to share my homework and highlight charts of interest. If you're a regular viewer, then you will know that I always start these videos off with a look at the Russell Index. I look at the Russell as my proxy for the markets overall. As I shared last week, for two reasons I want to keep this video short and not look at too many things. And number two, I deem the Russell Index to be perhaps the most rate sensitive, and so if there's trouble coming in the markets, I would think the Russell may be the first to react. It's my canary in the coal mine, so to speak. So with that, let's take a look at the big picture look at the Russell, and for that I use the IWM, which is the ETF that represents the Russell 2000, and I always step back to take a look at it on a 5-year monthly view. We've been keeping an eye on this area up here. So as a reminder, the blue line down here is long-term support and resistance. We're kind of ignoring it for now. The orange is more medium. And right now we have this dark black line as our diagonal support resistance on the Russell, along with this smaller line that we drew in several weeks ago, which you'll be able to see more clearly when I zoom in. But for now, I just want you to note this wedge pattern on the Russell, IWM, that we've been keeping an eye on really since the beginning of the year. Worth noting, the candle for the month of September was a bullish orientation candle, pushing us up and over our black diagonal line of support resistance, the line that had held price in all throughout the balance of the year. And then October, we had this teeny tiny candle, I will zoom in, of indecision, but it rested right above our line of support resistance. And now so far for the month of November, we've got a red candle shaping up in this area. And last week we noted the close below the 8-day EMA on the weekly candle, which I'm going to zoom in and explain a little bit more. But I just wanted you to see the monthly look and where we are right here, right now. So this is the area that we're really going to focus on. I'm going to pull it in from the 5-year monthly to the 1-year weekly so we can better see how price is behaving. Same blue line that goes back all that way, same orange line, and here's that darker diagonal line of support resistance. And then several weeks ago we drew this trend line in up here saying, look, if the Russell is going to continue with that uptrend, then it's going to have to get through this line to carry on and go this way. So we noted, we use this blue line as our guide, which is the 8-day EMA. I use it on both the weekly and the daily, but my trigger for me getting in and out of positions would be using this on the daily. So as a reminder, we're looking at it currently on the weekly. I just wanted you to note that on the weekly, we had a close below the 8-day EMA last week. So now I'm going to zoom into this area here on the daily. So there's the 6-month daily, there's that same line, wasn't able to get through, and now we are below what I am using as my area of support and resistance. So the Russell to me is below support, and so my orientation would be that until it gets up and over this area here and resumes that uptrend, if it does, I am looking at things from its lost support point of view. Things to keep an eye on this week. Donald Trump is saying that he has some sort of big announcement he's going to make. There's that tax reform thing. But on the other side of the coin, Venezuela is now in partial default on its debt. And as we talked about last week, why Venezuela matters, I'm just looking at the credit markets overall and wondering if that might be a bigger problem than, I'm not finding a whole lot about it in the news, but I'm just wondering if that might be a bigger problem than it seems at the moment. So I'm keeping an eye on HYG, which is the ETF for the high yield bond market. Junk bonds, JNK, you can look at JNK or HYG. For the purposes of this video, I'm going to look at HYG, which as you can see is high yield corporate bond ETF. Sold off. It looks significant because of the volume. Let's go 2 years actually, just to get some perspective. But on a 2-year basis, it's had that same red candle before. So here, here, here. So, you know, interesting, but is it a huge sell-off yet? No, but I'm keeping an eye on it for sure. So I'm going to move it away from the weekly to the daily. And it looks as though it might want to pause in the selling here and start to lift, which I think would be important to the Russell lifting as well. So I'm keeping an eye on this one. If it can't lift here, then that's going to be something I want to keep an eye on. So keeping an eye on that. With price on the Russell, so getting back to that Russell chart, sorry for flipping around from chart to chart, but to me, in my way of thinking, it has now lost that area of support, so I'm going to be super cautious and careful. But we did have a candle yesterday that reflected a little bit of an effort to try to get back up and over the blue 8-day EMA, which we use as our guide. So I'm not putting any new names forward for our watch list, but I will highlight 3 charts that, should we get some mojo back into the market and price on the Russell go up and back over that 8-day EMA, look interesting here, and the 3 of them all have brilliant scores. So I'm sharing 3 past Chart of the Day Cafe picks that all have brilliant value and growth scores still, and the charts look interesting here. As a reminder, I'm not doing anything until the Russell shows more strength, but if that comes in the days ahead, then these are ones I'd be looking to. The first one is AVGO, Broadcom. First, we're looking at the 2-year weekly chart. Put it forward back here in early 2016. It's had a beautiful run since then, like this consolidation here, and then the nice solid bullish bar here. We're looking at the weekly and where it's settling in this area here. So I'm going to move it away from the weekly to the 6-month daily so you can better see how price is behaving. Beautiful consolidation, and then the volume came in. It's not up and over the blue 8-day EMA that I use as my guide, but should the markets start to show some strength in the days ahead, I think this one looks interesting here. It also has a dividend yield currently of 1.54%. The next one is Facebook, which we have highlighted several times lately. This is the 6-month daily chart. We featured Facebook here as one to watch for a move up and over the blue 8-day EMA. We featured it here again in our morning video as keep an eye on Facebook. It may move up and over the blue, which it did, and it is displaying a pattern here. I like the consolidation. I like the way it moved up this way, and I will be looking in a market that moves higher. Facebook, if it moves up and over that blue, looks interesting here as well. Scores are still there, and of course the last one is one we highlighted last week, and that's Pfizer. This is a long-term area of support resistance. It's moved up and over that area, consolidated nicely. We're saying Pfizer may start to move up and over the blue 8-day EMA, which it now has. So in a market that shows some strength today, Pfizer might be interesting. It has a current dividend yield of 3.63%. So those are 3 to keep an eye on. Thanks again for watching, and if you like this video, please subscribe to my YouTube channel by hitting the subscribe button on my YouTube homepage. That way you get the videos right away. I do my very best to screen for the best value and growth stocks I can find out there and combine them with great looking charts, hopefully saving you time and energy while I share my homework with you. Thanks again. Our next video goes out on Thursday.